Hey, what's up, Marketing Savage Inner Circle? How you guys doing today? As promised, we got this badass interview with my boy Jonathan Fodera, who we are going to be talking some really cool stuff today. And I'm super interested in this because I truly believe, like I was just talking to Jonathan, like there's people that are at very high levels in business, and it's one of these topics that shit we were just talking about. Like this is the type of stuff that we really wish that we would have been taught in school, learning about how to create business credit, not only create business credit, but how do you apply for loans? How do you work with lenders? What are they looking at? So we've got Jonathan in here today, and I want you guys to feel free to ask questions as we're moving through the training today, because we're going to want some material. And I want to say that Michael, hey, what's going on, Michael? Thanks for joining us today. And I want to say that Michael actually already had a question out there for us. So we'll go ahead and get to a little bit of a Q&A here towards the end. But that being said, guys, drop questions here in the comments while Jonathan's talking. He's very busy. He's got a lot of shit going on, and he's spending an hour with all of us to answer anything that we've got to ask him today. So make sure you ask questions, my friends. Jonathan, how you doing?
Hey, John. Hey, thanks for having me first and foremost. It's a pleasure to be here. I'll give you guys a quick little rundown on me. Not that anyone gives a shit, but kind of show you where I'm coming from. So I've been in small business lending for the last 14 years. I've actually consulted with some of the FinTech companies. So like the guys that are making your credit decisions, I've worked with, one-on-one or with their whole company. And I actually started and got my foot in the door in FinTech. I left Wall Street to go into FinTech. And then I realized that these companies, the major banks, these FinTech companies, they are not small business friendly. They claim to be small business friendly, but unless you know all the different programs that are out there and exactly what those banks or companies are looking for, you're going to be in a tough spot, because you're either going to fit their box, okay, or it might not be the right program for what you're trying to do. So I'm going to try to break down everything that you need to be able to fit in as many people's boxes as humanly possible, and understand what the differences are with some of the programs. So as you're growing, as you're scaling, you know exactly where to go and how to get it done. All right. So let's just talk about what a bank is looking at 99% of the time. Okay. First off, they're going to look at your credit. And when I say credit, I'm talking about business credit and personal credit. All right. To break that down even further, there are many different types of personal credit, meaning there's Experian, Equifax, TransUnion, and each one of those has probably 9 or 10 different scoring models. So that's why if you go on a Credit Karma, and that's one takeaway for you guys right now, if you don't know where your credit is, go hop on Credit Karma. It might not be accurate, but it will let you know if things change. So you need to have, you always need to know, yeah, your finger has to be on the pulse, right? So my first challenge is go out, get Credit Karma. It's completely free, and monitor your credit. All right. Second, if you, and I'll drop this at the end, but you want to start building business credit. The reason why is because there's certain programs that they're going to look heavily at business credit. Like if you need a piece of equipment, right? Or if you're going to do some type of invoice factoring, if one of your clients decides to factor and they're factoring your receivables, and that's just a little high level, but they're going to check your business credit. And there's a bunch of different bureaus for business credit as well, but that's neither here nor there. So the first thing they're looking at is your credit. Second thing they're going to look at is your time in business. Okay. And I've posted a lot of infographics. If you look me up on Instagram, you can go through them all. This has actually been a series I've done this week. So it's very funny that John asked me to come on this week as I'm dropping all of these infographics. And if John doesn't mind, I'm happy to post them in the group for you.
Please do.
Okay. So, but you can follow me on Instagram to get those infographics before. It's just Jonathan Fodera. And so time in business is really, really important. And the main premise in what they're looking at in time in business is they want to see how risky it is to lend to you. So if you're a startup, 0 to 6 months, it is incredibly risky to lend to you. 6 months to 12 months, still considered a startup, still very risky. When you go, let's say year 1 to the end of year 2, it's still quote unquote a startup, but you're kind of growing, you're less risky, and more programs are available. After 2 years, let's say from 2 to 5 years, you're showing some level of stability, and it's there. You can get any program that you really want after 2 years, and then 5 to 10 years, you're golden. At 10 plus, I mean, the world is yours, right? Because most businesses fail in the first, call it 2 to 3 years. It's just a fact. A lot of it is cash flow management. A lot of it is not being resourceful enough, but that's how lenders view it as well. So it's just riskier at that point. All right. And the reason I'm bringing this up, not that you can control your time in business, because you really can't, but I see a lot of people make mistakes where they have an entity or they have a corporation, and all of a sudden they're like, you know what, I'm going to change the corp. Don't change the corp, because you're resetting your time in business. Now, if you come to me, I have to prove that it's the same business, you just changed your corporate structure, and then I have to get exceptions at the bank, right? That is not something that you want to make a habit of. All right. The next thing we're going to go over is cash flow. Okay. Cash flow has so many different components to it, but it really is very, very important to understand. So the first component is how much are you putting into your business bank account every single month? All right. What is the actual business revenue going in? If you do not have, and this is a big mistake I see, and it drives me crazy, you don't have a business bank account set up, you need to get one. PayPal is not an acceptable business bank account. Neither are some of these other weird ones that I see all the time. Okay. Go to a Chase, go to your local credit union, although credit unions are a little bit of a pain. Get a business bank account established. It's very, very important. So first is how much is getting deposited into the bank every month. The second thing is how consistently is that number being hit. So if you're doing $50,000 a month every single month, is 50 the average, and 1 month you're doing 120, the next month you're doing 10? Because if it's inconsistent, John, I see it all the time, bud. Construction all the time. If it's inconsistent like that, that's going to get flagged. So they want to see consistency. Some businesses, you can't avoid it if it's a seasonal business. What I mean by seasonal is that, if you're a restaurant in Florida, you're going to crush it during the winter, especially if you're on the water. But in the summer, you're probably not doing the same amount of business. Okay. So if it's a seasonal business, we always have you submit 12 months of bank statements prior to us working together. Now, another thing they're going to look at is the number of deposits. All right. If you have 8 deposits or less, you are going to be considered a riskier business. Why? Because you have a lower concentration of clients, which means if you have 8 deposits or less, and let's just say 2 of your clients leave, well, guess what? Your revenues are going to get crushed. If you have 15 plus deposits a month, every month, you're showing a wider variety of clients, right? So if 1 or 2 people leave, it's not that big a deal. All right. People really mess that part up and they don't understand why, but that's super, super important. All right. The next thing, and I see this get messed up a lot too, they're going to look at your average daily balances. The average daily balances is just a running average of how much money you keep in the bank at all times. My rule for people is ideally you want at least 10% of what you do on a monthly basis in the account at all times. I'll give you an example. If you're doing $100,000 a month in revenue, you should keep at least 10,000 in the bank at all times. Okay, because they're going to be looking at that, because that shows stability. It also shows that you can afford whatever payment you're going to be, signing for, and that's super, super important. The next thing they're going to look for is negative days. Okay. It happens in most businesses. Everyone has a cash crunch unless you have a line of credit, and we'll get into that later. But they want to make sure there's not a lot of negative days. When you see negative days in a business bank account, it shows that could be some cash flow issues, right? And that's hard to get approved. So please make sure you avoid those at all costs. Okay, if you have less than 3 negative days a month, it could help. It could, you have a chance. When you have more than that, it's very, very difficult. Okay, so that's going to be the last thing. When it comes to cash flow, they want to see steady or increasing. All right, this is a big mistake I see a lot of people come to me with. Is you guys wait too long to apply for a line of credit or apply for financing. Okay, the best time to apply for financing is when you don't need it. Let me say that again. The best time to apply for financing is when you don't need it. Why? Because the business seems healthier. You're going to score out better and you're going to get better terms. If you come to a bank or you come to me and we're seeing declining revenue and the prior 6 months there were no negative days and all of a sudden there's a few negative days, well, that shows that there's something going on that we have to look into more, or we might not be able to get you approved. All right. So that's very, very important. Now, the next thing is profitability. All right. I'm an RTA, and we had about 2 years ago, we got to listen to Mr. Wonderful speak. Right. He is a really nice guy in person, by the way. Gem. One of the things he says is, I think he owns just a crazy number of businesses. And he gets a monthly P&L for each business, and he reviews it the first weekend of the new month. All right. How many of you guys actually review a monthly P&L at the end of business? They can't communicate with us, right? So I'm not going to be able to get the right answers.
They can, but they got to type. I think a lot of people are just going to will watch.
Okay, no worries. Sorry. So my point being, try to get a monthly profit and loss done so you can kind of track your metrics, see how you're stacking up, see how, because if you can't measure it, you can't improve it, right? And so this brings us back to profitability. There are certain programs that you have to be profitable. What's up, Drew? How are you, buddy?
Yep.
Love Drew.
Well, we know Drew gets a monthly P&L.
Yeah, he does. He definitely does. So there are programs that you cannot get if you're not profitable, right? If you're in business for 2 years and you're not showing a profit and you're not paying yourself, like through W-2, you can't get a term loan. If you're not profitable for 2 years running and year to date, you can't get an SBA loan, right? If you need a big piece of equipment, once you get over like 100K, they're going to look for financials. If you don't have those financials, and if they show that you're losing money, you're not getting that. So typically, the larger the business is, the more financials come into play because they look at the application hard, right? So a business that's doing 6 figures, you better have a monthly P&L, right? It's pretty important.
And it's easy because, I use online QuickBooks. And that stuff can be done very easy from a bookkeeper. And it's a simple few clicks on actual QuickBooks to get that, every month.
Yep, I do the same thing. Yep. QuickBooks is great.
I use the online version. It's super easy, and I've used it for multiple businesses.
Yeah, it's not expensive either.
That's I don't even know. It's so insignificant. I don't know.
Exactly. If it's more than $100, I'd be shocked.
Yeah, me too. It's got to be less than that.
Yeah. So those are the 5 things they're going to be looking at, right? So before we get into different programs and where to go for financing, what questions do you guys have?
Well, I can tell you that we had a question from Michael, and I'll tell you it's interesting. I only see you as Facebook user here, my friend. So if you could click the button above the video and approve your name for comments. But this Facebook user, because I can't read his name, It says, I'm currently in the process of getting the orders in affair to apply for a business funding. What are the odds of that he comes here? Talk to Jonathan. Jonathan will be able to help you out. In fact, he's going to give you guys a link that you can kind of work your way through with him to help you do that. So he's one of the best I know. Like, I've had so many people refer me to Jonathan over and over again when it comes to business funding. I mean, helping everybody from people at Arate to Apex and through and through. So that's why he's here today, guys. So just another addition to the arsenal that we've added to the Marketing Savage group that just makes this group much more powerful, that we have a resource such as Jonathan here. I will tell you, Michael Hernandez had a question. I can go ahead and put it on the screen here. And anybody else who has a question, please feel free to go ahead and ask it now. I've got some questions myself, but I want to make sure that all of you guys get your questions in first. But Michael, he was asking about buying a building that is leased out to other businesses that is actually garage space. And Michael, he's in the automotive business, so I'd imagine he's looking at maybe buying a building, but it already has some of the garage space leased out. So he would be essentially buying them leases with the property. And maybe that's so he can open up his business in that building. And with commercial businesses, if you got 3, tenants, it's likely that he could probably operate in one of them bays or one of them spots for nothing, for zero.
Yeah. Well, here's the answer to that, Michael. If you're buying the building, okay, as long as you occupy 51% of the usable space, you can do it through what's called the SBA CRE, Commercial Real Estate Program. As long as there's no prior, you need 680 credit, you need to show that you've been profitable for the last 2 years. They're going to compare what you're paying in rent now to what the mortgage or what that note would be if you bought the building. And that process, as long as you have like a signed agreement, that process can take anywhere from 30 to 90 days to get wrapped up. But you're talking about financing over 20, 30 years, okay, at very reasonable rates. So that's the way I would do that. My only concern is I don't know how many of those spaces are leased. I don't know how many you would actually keep. As long as you are occupying 51% of that building, that would work. The other thing you do is try to get a commercial note on it. I wouldn't be able to help you there. I could help you with the SBA. I can't help you with a commercial note. But that's how I would do it. Now, if it's a cheap building, right? Like, what's the best way to put this? I don't know how much the purchase price is of that building. There could be easier ways to do it depending on the purchase price. So if you want to drop in the purchase price, that might be a little bit, that might be helpful. All right.
We've had a lot of commercial real estate in the area. I'm not too familiar with Dallas yet, even though I was looking at commercial real estate yesterday. We were looking at an office down here at the Star. Kind of crazy. We would literally, I'm looking at this office, right, and with a commercial real estate agent, and I think the guy who owns the Dallas Cowboys, I may make a mistake with this because I'm not really big into football, but I think his name is Jerry Jones or something like that. Is that his name?
Yes.
Yeah, so I was told that if I lease this commercial space, I am sitting in front of Jerry Jones's office, meaning that this guy has to stare at me every day, which is pretty
cool.
pretty appealing. We got some other things going on though that I might not. I got a couple months to make up my mind on this, but that being said, in my market, you were able to really go in and buy quite the commercial space for like $300,000.
Yep.
And I mean, a lot of times these spaces would be in an industrial park, and a lot of them already did have leases and they were occupied. So anyhow, Michael was able to answer the question. He says that he wouldn't be 51%. It has 11 doors plus a parcel of land, and it's around $400,000.
Okay. So the best way to do it would be a commercial note, right? To buy it, you'd have to get their rental income and a whole bunch of other items. So first, you're going to have to come to an agreement, and then in due diligence, you can request all of that, and that's what you use to get the loan. The other way to do it, I don't know what your business looks like, Michael, but you might be able to get away with, and I've done this a couple times. If you get an SBA loan and it's for working capital, quote unquote, your business is still paying it back, so it doesn't really matter. But I wouldn't tell them you're buying commercial real estate. I would say I'm putting money back into the business. Just saying, if you wanted your
Just putting
business
it
to
back
finance.
into the business by buying a piece of commercial real estate.
Yeah. You don't want to say that though. You want to say marketing,
'cause
equipment, all that good stuff.
their antennas go up all of a sudden, right?
Oh yeah, there's some
And then
stuff
they
you
got
should not say.
yeah.
I
You
said it
got,
all.
something I learned a long time ago when it comes to the government, and this is something one of my very first mentors have taught me. He said, there's nothing illegal about being stupid, meaning that you just say like the least amount you have to fucking say, like, and whether that's the IRS or whether that's a government, he said there is no law against being stupid.
I am fucking stealing that. That is amazing. That is amazing.
Yeah.
So, all right, thoughts on owner financing, Michael? Depends on what rate they give you, but yeah, man, I would do it. I'll tell you this, and people don't believe me when I say this. I use a commercial real estate line that's like soft hard money. So me personally, I pay way more than I need to. My credit's 800. I got tons of assets. I pay higher rates for ease and for people not to break my balls and for speed, right? When I'm going in, like a big thing that I do on the side besides lending, I do value add multifamily investing. So if I see a house that I want to go buy and we're in competition, I want to just use my line. I have a $5 million line. I'll go use that line. I'm paying way more, but it's much easier. And ultimately, the business asset that I'm buying, the cash flow more than pays for that. So I'm cool with that. So that leads me to another really good point. Let's talk about the right ways to use financing versus the wrong ways and how to analyze any deal that you guys have on the table. Okay. So you always want to use leverage. When I say leverage, I mean debt for growth, right? There's a couple times that, hey, something happened in the business, you got to cover your ass. As long as you have a way to fix it, right? If you know how you're going to fix whatever caused that problem in your business, then borrow to do that. I never want to see people borrow money just to borrow money to try to save a sinking ship. Okay. Way too many people get married to something and they take out good money after bad, and all they're stuck with is a failed business and a whole bunch of debt. That is the last thing I ever want to see. So if you have a way to fix a problem that the business has, yeah, borrow to do it. Okay, but make sure it's going to be that fix, and you're going to get back on track. So let's talk about short-term money versus long-term money. All right. If one of the things I want you guys to do tonight, if any of you guys own a home, I would like you to go and look at your most recent mortgage statement. I want you to see how much you're paying in principal, taxes, and interest. And then look at your year-to-date summary. It will make you sick. Okay, same thing. Yeah. If you want to look at your credit card statements, right? I always pay my balances off at the end of every month. But if you look, by law, they have to show you that if you just paid the minimum payment, how much interest you'd be paying and how long it would take you to pay it back. All right. Credit cards are usually not the way. The only reason you guys should ever use credit cards is to get the points and pay it off at the end of the month. Don't ever grow a business on credit cards. You'll go broke. But that leads me to my next point, right? What's the right way to build your business? Not just the business credit, but through financing. Well, you have to think of it like this. If it is a short-term need, meaning you need it on a monthly basis, weekly basis, once every 2 months, you want short-term financing. Okay. The reason being is because you can buy whatever you need, you sell it. Let's say it's inventory. You buy inventory almost a weekly basis, right? So you buy the inventory, sell it, you pay off the note, you keep the profit, and you keep rolling that, right? If it's a long-term purchase or need, you need long-term financing. What do I mean by that? Well, if you need a piece of equipment, right? Somebody's in auto repair. You shouldn't use a working capital advance or a line of credit to go purchase a piece of equipment. You should use equipment financing. Why? Because equipment financing is going to go up over 5 years. Well, guess what? You're probably using that piece of equipment 5 years or more. So you want to pay for whatever it is. During the term should kind of match the duration you're using it. All right. Same thing like an SBA loan. SBA loans are great, but I wouldn't use an SBA loan and pour it into marketing. Why? Because every single month you're going to have to market, right? You're using a long-term line, an SBA loan that goes out 10 years. You should use that. Let's say you're in trouble with some debt, or you need to consolidate debt, equipment. That's what you use an SBA loan for, right? You use an SBA loan to buy a building. You use an SBA loan to purchase a business. All right. If you want to start a business, quickest, easiest way to start a new business, you need under 100K, is a term loan, because they're only going to go off your credit and your provable income. All right. So a lot of coaches, a lot of consultants actually link up with us because now they can sell a higher price point package and they can finance it over, let's say, 3 or 5 years. And it makes sense because if that coach is actually doing what he's saying he's doing, like in here, like John's delivering, right? It makes it easier because now you're getting that education that's going to help you grow your business, and you're paying for it over, let's say, 3 to 5 years. That makes a ton of sense. It helps with your cash flow. Excuse me.
Yeah, you're saying you finance, like for instance, if I was to, I'll give you an example. Tom Ziegler has a program that's like 20 grand or something like that to be a certified coach. That would be something I could refer you to Tom and say that, okay, hey Tom, if you got some people that want to become a coach, but they want to be a Ziegler certified coach and they need financing, then talk to Jonathan here because he can get that taken care of for you.
100%. We do that with a lot of different people, actually, a ton. So the next thing, and this is the most important thing when you're analyzing if you should take financing or not, you need to compare the payment to the increase in cash flow. Okay. What I mean by that is, let's say you're paying $2,000 a month for a loan. Whatever you use that loan for better be bringing you in more than $2,000 a month. You never want to go cash flow negative. So let's just say you're going to invest in marketing, okay? And you're going to put 100 grand into marketing. Let's say the payment's going to be $5,000 a month. If that marketing only projects out to bring in, let's say, 3,500 a month, you don't want to do that deal because you're going cash flow negative. That's a problem, okay?
Especially over time.
Absolutely, you get destroyed. That's how people lose a business. The next thing is the return on investment more than what you're paying for that money. All right. So quick analysis here. Let's say you borrow that 100,000 and it costs you 125,000. I'm just making round numbers. All right. And you know that marketing campaign that you're going to do, it should bring in about an extra $10,000 a month. Well, you're going to make $120,000 more, and you're paying $25,000 for that money. So my point here is, if somebody came to me today and said, "Hey, for every check for $25,000 that you write me, I'm going to write you back a check for 120," my checkbook's going to go up in smoke, right? So you want to compare the payment to the increase in cash flow, and you need to compare the cost of the funds to the overall return on investment. Okay.
Or some of this another good example would be if you had a painting company and you had some guys kind of standing around here and there. So you decided to open up a junk removal company. And with this junk removal company, you could project that you could get with your current advertising or marketing and the strategy that you use for the painting company, that you can implement that strategy and at least get 4 loads a day done. You'll keep your employees busy, and that would calculate to $1,500 a day, which, 20 working days, $30,000 per month, but you had to buy the truck for 100 grand. You've got yourself a really good return there.
Absolutely.
You're going to pay for that truck in 3 or 4 months. And then after that, you're going to be ahead.
Yep.
So especially if you're confident in your market, you've already got a current client base, and it's a additional complementary service to what it is that you already do.
Absolutely. That's a great analogy for it.
We call that the value ladder inside of the group. And interesting enough, online marketing, a lot of times a value ladder just kind of does nothing but goes up. Well, sometimes in service-based business, it actually starts high, and there's other value components or services that you can add additionally to your business. So I always said a value ladder can go up and down. But I always recommend that any component that you add to your value ladder, you want to make sure that the profit margin is high, or if not better than that original, that core, that key service that you're doing.
I love that.
You know what I mean?
100%. Because that's what we did with integrated. We think about what our clients need and then build it out from there.
Yeah, unfortunately, if you put something in there that has a lower profit margin, I mean, sometimes that can increase, but it won't increase your overall lifetime client value when it comes to the bottom profit line. Yep. So I look out for things that are very heavy in, that don't have a high profit margin. I try to look out for them additional business models. I'm always looking for something, a higher profit margin than my core service that can be kind of plugged in or added in and bolted on. And at that point, it's pretty easy to project like what percentage of clients that are already purchasing from you that may need these additional services. And the truth of the matter is, it's much easier to sell to your current client base than it is to go out and attract new people.
Cheaper too.
So it's cheaper. It's way cheaper. Way cheaper. And them are the type of things that I look at. And I really think all that stuff kind of falls in line with, are you deciding, should I purchase this? Like Michael in the automotive business, he may decide one day, goes, I got a lot of people coming in. I do this dent removal thing, but I got a lot of people coming in asking me to spray their bumpers. I need a paint booth, but the paint booth is going to cost me $15,000. It's going to cost me another $15,000 to install, probably bring it here, transport it. Someone have $30,000 wrapped up in that, but how many jobs are coming in here that I'm not capitalizing on? And then if I got a paint booth and I put it in here, then I can hire somebody else to do it. So now it's not taking my personal time, my personal labor. And then you start dialing in what do the profit margins look like? What does the investment look like? What does a paint bank look like? And you start plugging in them numbers, and you find out at the end of the day, does it look like it'll work?
Yeah, that's spot on, man. I love that. So I want to go through a couple other things with you guys. So you need financing. Where can you go? Right. It's going to kind of break down to three places you can go. You can go to a bank, right? I would always tell you to start with your local bank and who you bank with. All right. Now, here's the advantages and disadvantages. The banks could have the cheapest programs, but they don't have all the programs. Okay. So if you ask the bank to do invoice factoring for you, they don't even know what that is, right? You have somebody that's making $40,000, $50,000 a year. They're not incentivized at all to move that along. Nor do they know, hey, what's equipment financing look like, invoice. Don't ever go to your bank for payment processing. They're going to rip you off. They're going to destroy you. All right. Because they're
going to act like they're doing you a favor. But yeah, you're right. The rates continuously go up. In fact, I had him on Adam, right? Adam, he has a credit card processing software that keeps track of the banks and alerts you when they raise the fees. What they do is they plug you in at a lower rate, and then they secretly raise the fees over time. And he has a software that plugs in to alert the owner that their credit card processing fees went through the roof. That's why most people just, I know a guy who owns a company called Fruit for All Reasons, which is a smoothie franchise. And I mean, he's even doing stuff now for the United States military. He's an ex-military guy, and they had him put one in Wright Pat Air Force Base, and he's expanding all over the country in military bases. And then incredible, right? Well, he uses Square because he can predict. That's the reason why he uses it, though. He got frustrated with his bank, And he said, dude, it was costing me like somebody swiping a card cost me like $3 or something. And then he could predict Square.
Yeah.
He could predict that it was 3% every time somebody swiped their card. So because of that, he had a predictable profit margin on every single smoothie that was churned out. He didn't care if he was paying an extra point, 1% or minus 1%. He just needed to know what it was that he was paying.
Yeah.
So he could fluctuate and raise it or lower his price accordingly.
Yep. No, payment processing is an interesting world because you have interchange, you have a bunch of different factors, but we do a lot of it and we work with some franchises, and you'd be shocked how much. There's basically two ways, just to touch on this real quick and get off to the where to go. You can pay the fee, which is 90% of processing out there. All right. That fee is always going to be between 2 and ultimately 4% as an effective rate. Or you can pass that fee to the client. If you pass the fee to the client, you're literally going to eliminate, and this is what 90% of the people that sign up with us do, you're eliminating 90% of the fees that you're paying. You can save by using that program. We've saved somebody $50,000 a year by doing that. Okay.
No doubt.
That's $50,000 to the bottom line. And you don't have to go through us. A lot of people offer that, but it is a very popular program. My long-winded point, happy to help you with that, but whatever you do, don't go to your bank for processing because they're going to kill you. And Square's expensive too, but it is predictable, like you said.
Mm-hmm.
So when you're looking at these things, right, when you're going to a bank, they're going to take more time, they're going to have higher standards, and they're not truly incentivized. But if you do fit that box, you will get the best rate. Now there's a lot of brokers, okay? There's a ton of brokers. Most of them don't have all the programs. They say they do. They don't. If you go through them, they will get you something quick. They're very incentivized to get it done. Just watch out. When anyone sends you an agreement, please check it for fees. Most FinTech companies and most banks have some sort of origination fee. That's normal. That's standard. What's not standard is what they call a personal service fee. All right. I have seen them as high as 10%, for anywhere from 5 to 10%. Sorry, guys. And what'll happen is you'll see it get stuck in with the contract. So all of a sudden you're going through the contract and you're seeing like Chase on every page, and then you see let's say Go Accredited on the last page, and there's this 5% fee. Don't sign that. You don't have to sign that. Just keep it moving, right? And then you have like what I set up as a marketplace, right? Our only mission is to get people into the best program they qualify for based on what they're doing with the funds, all right? And it's not a one size fits all. You got to understand what you're trying to do with the money determines what program you should use. The goal changes the program. And before anybody here applies for financing, what I'd like you to do is know where your credit's at, look at your monthly P&Ls, look at your cash flow, try to pull your business credit, because you want to understand how you stack up before applying, all right? Because if you know that, you should know what types of deals you can get. Like if you're in business a year, you have 650 credit and $30,000 going through the bank every single month, you should qualify for a line of credit. If you have 680 credit and you've been in business, let's say 3 years, and the last 2 years you've shown profits on your tax returns of 45,000, guess what? You should qualify for 350,000 over 10 years doing an SBA working capital loan. Okay? There's a lot of different programs that are out there, right? Every business here should have a line of credit. I preach this. And why is that? Because one, you never know what's going to happen. Okay. If you need the money, you want to be able to draw from it in a day, for an emergency perspective, or from an opportunity perspective. Let's take Michael's business. He's in automotive repair, I'm assuming. Well, what if his competitor goes out of business and they're 2 or 3 blocks away, and he can buy $100,000 worth of equipment for $25,000, but he needs the money now? Well, you're either going to deplete your business bank account and make that purchase, Or if you have that line of credit set up, you can go draw and write that guy a check the next day. Okay, so every one of you should have a business line of credit.
So yeah, that's something I do not have. I actually do not. I've always paid out cash for everything, but that's the reason why I'm so excited about listening to this as well. Again, guys, this is the stuff that we should have been taught in school. Oh man, this is some like real business education 101 on the financial end of things. I'm super stoked about all this stuff that I'm learning right now. I'm sitting here shaking my head just like everybody else. But ideally, let me ask you something. When it comes to business credit, let's talk about some of the folks here who may have just started a business, or maybe they have a business for years and they haven't established credit yet. How do you begin to start establishing, a solid credit score? I mean, everybody knows how to do it personally, right?
Mm-hmm.
At least most people do, and a lot of times that's having a big, a bunch of lines of credit, but not using that credit. Meaning that you've got a lot of available credit out there. Your credit debt ratio stays low when it comes personally. Also, your income's high. Your payments are lower, and there's a lot of different variables. Of course, you don't want to miss payments and anything like that, right? To make your
Mm-hmm.
personal credit. But how do you establish your business credit?
That's a great question. So as long as you have an EIN number, right? The first thing that you do, and we actually offer a done for you package doing this, but we also give a guide away to help. So the first thing you do is you get a DUNS number. Okay. I don't recommend you use nav.com because they pull business credit for you. Don't use them because basically what will happen is if you go there, you're going to get put on every broker's email list and your phone's not going to stop ringing. So don't do that.
Mm.
Get your Dun and Bradstreet number. It's free. You enter in your information. They're going to make sure that everything you enter matches, right? So they want the addresses to match, the websites to match, the locations, everything to match. And then what you can do is you can start opening trade lines, right? This is the part that we do for people. The trade lines are important. Some people say, oh, you could just go buy age trade lines. Well, guess what? If you bought trade lines for a logistics company and you are a manufacturing company, it doesn't make sense, right? Penske isn't giving you credit. So don't do that. That's a scam. However, when it comes to business credit, it's more about being wide than it is deep, right? So on your personal credit, if you have a mortgage, a car payment, and maybe two credit cards, and you paying them every month, you're gonna have a great credit score. Okay. When it comes to business credit, they want to see how many trade lines you have open. The easiest one to get is Staples. Call up Staples. Every business needs Staples. Give them, fill out their application, and only put it in the business name. Right. You don't put your social on it. You open it. You use it every month. You pay it off. And depending on your business, you build out the rest of those trades. There's a few different ones that you can do. Staples, Best Buy, those are the ones that come to top of mind because every business needs them, right? You want to try to set up, between 10 and 20 trades and use them and make sure they report. If you don't give your tax ID number, you don't give your DUNS number, they don't report. We actually just invested. Me and John were talking earlier, where we can pull someone's business credit and we can actually you could self-report using this software. So if you have like an Apple computer that you use for the business, that counts, right? So they want to see it go wide. Why is this important? Where does this come into play? Well, your Paydex score, your Dun and Bradstreet, when you're doing business to business transactions, that's really when it comes into play. If you need a piece of equipment, they're always looking at your Paydex score, which is just a business credit score. If you're doing any large transactions, like something that's 250,000 or more, they're going to pull your business credit. They'll actually pull it a little bit under that too. Um, do I think personally that you can completely separate your personal and your business? No, I have not seen that in 14 years. There are some people that are experts that would fight me on that. I'm cool with holding my ground and saying you will always need a good personal credit score in addition to having good business credit. But
Because they want you on the hook. I mean, the more they have on the hook, the better off. I mean, they want your business credit on the hook, and they want you personally on the hook
of course,
because it would mean much more to you. In fact, you could close the doors on that business, but if you're still personally on the hook, then it's going to ruin your personal credit as well. It's just another way to, and I would imagine that, yes, it probably could be done if you were, for instance, like Verizon Wireless and you've got an IPO or something like that. I mean, who's going to be their individual, their person who gives them, somebody Verizon Wireless, is the CEO going to put his social security number? No, because he's an employee.
Believe it or not, I've done large transactions like that, and you have to get a resolution from the board. So it could be any C-suite executive. They have to, and you are getting a credit. You are but not all of them go that way. That's for one certain type of program. What you were saying is 100% correct, but I've seen it the other way. But let me put it to you like this: you're never getting an SBA loan without your social security number. Yeah, that's not happening. So, and that's the best program you can get as long as you use it wisely.
With an SBA loan, how many people qualify for that we just don't even know? Like, I've never had an SBA loan, and I'm just going to be straight up with you guys. And I know a lot of people have called me, they haven't called me anything for it, but I mean, a lot of people have called people, dumb for not taking advantage of all the government money. But I just, out of principle, I wouldn't take any of it. Like, I took zero amount of dollars from the government, and it was just because I don't know. I mean, I understand why my friends did it. And I know that, I literally, like, I got people that I respect, that I know and respect, that, opened up loans for every single one of their companies, and they got a fuck ton of free money. I just didn't, out of, I don't know. I just don't like taking government money.
I agree with your premise, but let me spin this back to you. Take a look at your top 3 competitors. Yours personally. Yeah. Would it concern you if each one of them got 500,000 over 30 years at 3.75%? If they were smart, do you think that could damage you?
Some people it could. For me, I don't think so. I don't feel that I have a competitor out there in what it is that we do.
I understand that.
Well, I kind of operate on a creative base rather than a competitive base.
Yeah.
And to be honest with you, like, I've been the type of individual who I've gotten much better results making friends with people that were in our industry, that we were locally, whether it was locally working together or but I can see in the competitive aspect of it, of somebody who's really working, where the two companies are cutthroating each other and all that kind of stuff. I just simply don't operate like that, but I know that it is. And it's one of the things that I've learned, and like a deep core that I believe in. And it ultimately comes back to the book I was talking about the other day when I was interviewed on your podcast, The Science of Getting Rich, where it talks about to operate from a competitive, not to operate from a competitive spirit, but to operate from a creative spirit is the key to success. Because it's unfortunate that if you operate from a competitive spirit, you are throwing down the ladder behind you that other people could climb up. And every individual who operates at that level and are very good at the competitive ground will be killed by the sword that they wielded. They'll literally eventually be killed by the sword that they yielded. Now, the people that operate on the creative aspect, and from the creative spirit, and from more of a state of abundance, will just produce so many and so much. Like at the end of the day, it's like it's a better world to live in.
Of course.
And if you step into that creative mindset, but that's just me. That's a core belief. I understand that a lot of people want to, and I joke around about drinking blood out of the skulls of your enemies and all this kind of shit. But what a lot of people don't realize, like, I even had a guy text me the other day who apparently thought that he was my enemy because he was in a competitive business of mine with me. And he knows that I'm not in that business anymore. So we text a little bit. And I said, I'm just going to tell you something, bro. Like, I've never wished anything but happiness upon your family and your children and you, my man. Like, I mean, I know you might have been operating from that sense or from that perspective, but being angry at somebody is like eating poison and hoping the other person dies. So I've just learned to kind of walk in a different way, in a different manner, and I feel differently about things than a lot of people do. So because of that, that's why I guess I just didn't like the way it made me feel. No, I don't mind taking out a loan if I know that I'm going to pay it back and it's a good interest rate and all this stuff that you're telling me. now about being able to have that line of credit to be able to jump on opportunities. Like that stuff really, really interests me.
Mm-hmm.
But I was just being honest about not taking the government money.
John, if everyone was, designed like you and acted like you, this world would be a hell of a lot better place, man. I mean that, bro.
Well, that's the premise behind the whole movement, is just, and I'm not saying like I can't like nobody's perfect, man. You know what I mean? But that's the premise that I try to like hone back and come back into, all of us will fall into dark energy and use that as like a momentum when people try to hold us back and shit like that. I mean, there's that element, you could be a football player and you want to rip the head off the other, team, right? At the end of the day, you're going to shake their hands. You're going to be good.
Absolutely.
But when you're on the field, you want to rip their head off, believe me, I understand that aspect of everything. Well, but I just couldn't think of anybody I'd be worried about if they got that money,
I hear you. Well, let me phrase this a different way then. If you come to me for a line of credit, right? I feel it's my responsibility to get you into the best program possible.
Sure.
Right. So if I said, John, right now I could probably get you a line of credit, let's say 100K, 12 months, 12%, unsecured, monthly payment. But I said, John, if we could do this, or I could get you a loan, and that loan is 30 years at 3.75%. If I don't offer that to you, and I don't think we can, and I think we can get that, then I am not being responsible to our relationship.
Oh, absolutely, man. Absolutely. Okay. No, I get it 100%. Yeah. I get it 100%. I just seen all the money being pumped into the economy, and I was just, I'm such a libertarian, man, that I'm just like, this is gonna fucking wreck everything.
Oh, I'm with you, and it is.
And then it's like inflation and all this kind of stuff that comes along with it. And maybe I should have jumped all over it and taken it, but I'm cool with the path that I chose on that.
Well, the path is not over yet, my friend.
It will. It sure in the hell will continue, won't it?
Yeah. Well, they're gonna keep printing no matter what.
We'll have to talk because you might be convincing me into it now. You might be I've got some arm twisting going on here. I'm talking some logic into my mind instead of just my absolute hate for the way the government's interject into shit and do that.
Listen, I work out, but I don't know if I could twist your arm. I'm just gonna throw that out there.
We're talking money. It's like.
So why don't we ask? Can we open this up? I'd love to take some questions because John, me and you could literally talk all day.
Yeah, absolutely. And we're honestly about finished up here. We only have about 3 minutes, so we're at the top of an hour, man. We just burnt through an hour just like that. And quickly, if anybody has any questions, but if you guys do have additional questions, a lot of folks work during the day and stuff like that. So there's a lot of people that will also jump back on here and catch the replay. So if any of you folks that are jumping on here, catching the replay, or you jump on Marketing Savage University and you see this inside of our training portal, feel free to ask questions. And again, we're going to have our mastermind training tonight, and you can feel free if you want to stop on by. We're going to have that this evening at 7:00 Central. So yeah, we'll have a link in the group. That'll be a Zoom meeting. It's our once a month where we actually all go live and hang out together and talk and stuff like that. And man, I'm sure it's definitely going to be the talk of the group tonight about the financing stuff and how interesting this was. Like, no, I shit you not. We got my dude Ben Upham who's in here. We're on one of our meetings last month. Or a month, I think it was 2 months ago. This one was, and he's telling us about he's from Alaska, and he's inside of his house, and I'm looking behind him like, dude, are you like a fucking end of the world prepper or some shit, dude? Like I'm looking at his garage and like stuff that's in his background, like he's walking around his house. I'm like, dude, is that he goes, man, the best thing could happen to us is an EMP attack. And we started, he's like, because filter out, all the all the weaklings and the people like him would survive, from Alaska. And we started talking. He was talking about a bear that charged him recently out there, like a grizzly bear, and he had to kill it. So he's just like, man, he had one charge him once when he was unarmed, and he's ever since then he said, man, I want to kill one of them things. Yep. And so he's out walking, and a bear charges him when he's armed, and he ends up shooting. He said it's like the Terminator. He says they never stop charging because their heart beats so low that it bleeds out very slowly.
Oh.
and he had to put like I think 8 rounds into this bear.
Mhm.
So no shit, he's telling us about this whole story about killing this giant bear. He turns his camera over, and the head is like he has a body shop stand in his
Oh
garage,
shit.
and he's got the bear's head sitting right beside him. This thing was like the size of a I mean, it was like a massive, like he put his hand on it, and his hand looked like you ever know, like see like Andre the Giant hold a beer can,
Yeah, yeah, yeah.
how it looks like one of them little baby juice bottles, you know, and his hand looked like a little kid's hand, you know what I mean, like on top of this massive freaking grizzly bear's head just sitting on a stand in his garage. So
That's awesome.
we got
Did you
some entertaining folks that come on the live masterminds.
I don't know if I told you this when you were on our show. It probably happened after. So I have a pond in the back of my house. It's 20 feet from me. I don't think it's big enough to hold like fish or life. I was wrong. So I see something moving there. I'm like, you know what? Let me go check this out. And then I see two eyes pop up.
Oh.
Yep. It was like a 2 to 3 foot gator. So it was following me around, but it wasn't like aggressive. It was just more curious. And it wasn't big enough where I was like worried. So I called my wife. I'm like, Marissa, come out here. Bring Jonathan. Bring all this because I wanted to show him that. I didn't tell her what it was. Let's just say if she could have shot laser beams out of her eyes, I would not be here right now. She was not thrilled with me.
You're not gonna tell me that it's an alligator. Yeah.
Yeah.
Yeah. You know, I used to live in Florida, man, and some of them Florida dudes like swimming at nighttime and shit like that. I'm like, I'll tell you one place I
No.
ain't jumping is that fucking water. Ever. Ever am I jumping in that water, man? And we were scanning lights over the lake, and you just seeing little dot beady eyes everywhere, man. Them lights hit them crocodile or
Really?
alligator or like crocodile eyes,
Yeah,
and they
yeah.
just light up.
So
You
just
know,
take a
speaking of that,
flashlight all the time.
I was down at I think it's called Lucchesi. It's a boot store down here. It's a real expensive boot store. Picked up these boots that were like $13,000, and I'm like, "What the hell are these things 13 grand for?" Alligator, and he said it's farm raised alligator, and I'm like, "Really?" He goes, "Yep, you're paying for all the alligators' vet bills. You're paying for like all this shit, you know." I was thinking, I was asked the dude, I'm like, "Well, do you get like a picture of it? Do you get to take a little picture of your alligator, some shit, to take it home with you?" Because you can buy some croc boots because they get
Yeah.
them out of the Nile. Think about that. They just pierce them out of the Nile.
Yeah.
They get them, and you got a pair of crocodile cowboy boots for $1,000, right? But you
Yeah.
get a pair of farm fed alligator boots.
Yeah.
You're going to be paying like $10,000 plus for them
Damn.
damn things because you're paying to raise that motherfucker. I was like, I ought to get adoption paperwork,
You paid
you
for the
know,
college.
of his kids, right? Like,
You paid for Gator University. Congrats.
yeah, man. Yeah, man. So anyhow, Jonathan, man, great training that you put on for us today, my man. And like I said, if you got free time, we'll be doing the mastermind tonight at 7 o'clock Central.
Thank
And,
you so
and that's
much.
for everybody else as well. Jump on there tonight. I think we're going to have a great turnout, and that'll be awesome.
All right. Perfect.
All right.
John,
So,
thank you so much.
hey, thank you as well, my man. We'll go ahead and end this. And were you going to, Jonathan, real quick, you mentioned dropping a link on here
Yeah.
for them to check that out. Could you, when you're done here, run over to the group and drop a link in one of the comments?
Sure.
That
I'm
way
gonna do that
everybody can
right
have
now.
the way to contact you.
I am going to do that right now. Okay, cool.
Perfect, man. Hey, man, I appreciate the training, bro. This was more than educational. And man, I'm just so glad to have you on my corner, brother.
Sounds good. Hey, thank you. And John, honestly, man, if anything I can do for you guys, let me know.
I appreciate it, my man. All right,
Have a
Jonathan,
good
we'll
one.
talk later.
Thanks. Bye.